BTC for network fees for Bitcoin transactions.
Gotcha. Okay. What's the best way to avoid paying taxes when you're converting or selling crypto?
Yeah, it's a good point. So overall, and I always love providing this clarity and stuff when it comes to finance, because there's a difference overall between two very, very big terms. In the question, it talked about how to avoid tax in this case. And avoiding tax in this case is actually completely legal. Evading taxes in this case, where you're not paying the tax obligation you owe, that's a crime in that case. That's a really bad thing to do. You have to pay your taxes, guys. I know a lot of people in crypto don't want to say that or don't want to support the idea of paying taxes. Whether you like it or not, it's the reality of the situation. If you make capital gains on something, you're going to owe a tax on it. And capital gains, at least in the United States, it depends across the world. So I just want to provide that context. When talking about avoiding taxes, there are different types of strategies you can employ, but we first need to understand how a taxable event happens. Now, that is going to vary amongst different jurisdictions. But in the United States, it's generally going to be done through capital gains, right? So, when you're utilizing a product like GPIC, if you're a W-2 employee and you've got your income flowing from your employer into your GPIC account, where your pay will, or a portion of your pay will convert into crypto. That income that you're taking in usually is already going to have your taxes deducted as a W-2 on payroll. So the income tax is already paid. So from there, you actually don't owe any taxes in this case until you sell your crypto. So let's say I had earned a portion of my pay in crypto, and in general, the amount of cash I had sent over from my paychecks over the last year was $5,000. And now that original $5,000 investment in conglomeration in total is now worth $20,000. I'm going to owe taxes on the $15,000 of gains that I made if I sell all of that crypto. Now, if I just hold on to it, in this case, then it's not a big deal. So let's go ahead and talk about some of those strategies. How can you start to either defer or lower your tax liability? The first one, at least in the United States, is short-term capital gains versus long-term capital gains. If you sell your crypto after receiving it as a portion of your income, or if you're just generally buying crypto, maybe not even in Digifox, if you sell something within under a year and you make some gains on it in this case, that is short-term capital gains. And no matter what your marital status is, what state you live in, no matter where you are, it's going to be a higher tax obligation than if you would hold the position over a year from when you bought it. Right. So let's say I buy something on January 1st of 2021, and then on February 24th of 2022, well over a year, then I'm going to have a lower tax obligation. That's step number one. And I recommend that for long-term investors in this case. Just me personally, it's how I like to do it. But again, I recommend you guys talk to a certified tax advisor, financial advisor, if you need that assistance to make a real decision, right? The second thing that I always keep in mind, and I always recommend people just take a look into, is potentially having retirement accounts. Now, this is something that, again, for the average everyday individual, is something really good to maximize if you want to have a safe retirement. Most people in the US aren't planning for retirement. With a program like an IRA, which is a retirement account, right? Individual retirement account, this will allow you to be able to put up a certain amount of contributions. And I think for most people who are below 50, it's $7,000 per year that you can contribute to your IRA. And we're looking eventually at possibly exploring something like this with GPIC, but there are specified crypto platforms that allow you to put your crypto in, and basically what an IRA does is it defers your tax obligation. So let's say, for example, you've paid your income tax and stuff overall on your paycheck. In this case, it gets subtracted from your W-2 payroll. And once that's been converted into crypto, into an IRA account, it's just going to basically, you can actually trade it and sell it if you want, and do all these different things. And you actually won't incur any taxes that you owe that year. It defers your taxes to when you actually withdraw from the account as a form of income. So instead of capital gains, it should come out in the form of income in this case. And the great reason why, to kind of simplify explaining why it's called tax deferment, is you are going to have to pay taxes in the future. That's a given. But it's going to likely be at a lower income rate as you're in retirement, because your income bracket in the United States is going to be lower your tax bracket is going to be lower as your income bracket will be lower, right? You're not going to be making your prime year salary in this case. You'll probably be not working a job or working part-time. And that's why an IRA is a really effective product. So those are some ways you can start to defer or mitigate your tax obligation. And there's a lot of great applications out there that can help with that. Your accounting principles for how you measure crypto taxes, LIFO and FIFO. And then I would say last but not least, the one thing that I didn't mention, and it is predominantly in the United States, again, to my knowledge, is in this case, writing capital losses off, right? Let's say you made a loss on a crypto investment. You were, bought Bitcoin at $10,000 or an average price of $10,000 and you sold it at $6,000, 40% loss, right? Considering that in the United States, you can actually write that off. So in this case, it will lower your yearly obligation. And let's say if I just lost money in this case, I can write off, I think it's about 3,000. It's like a fixed, like a couple $1,000s. And then in the next year, if I make gains, I don't have to pay taxes on the gains I make up to the point of the amount that I lost. So the next year, that loss becomes materialized and you can write that off from your tax obligation in regards to capital gains.
Awesome. Thank you. Now that Cardano has a ERC20 token,